The content here is for informational purpose only and should not be taken as legal, business, or tax advice, or be used to evaluate any investment of security, and is not directed at any investor or potential investor in any Alphaswap podcasts.
Hello and welcome everyone. I'm King Uy and this is the Alphaswap podcast. Every week we'll be discussing a top investment idea from the platform and have an in-depth conversation with the user who posted the idea. You can learn more and join our community at alphaswap.io. This week, we're talking to Leanne Lee. Leanne, thanks so much for being with us today. You're a very active user on the Alphaswap platform, which we really appreciate. Could you start off by giving a quick introduction of yourself, please?
Sure. Thanks, King. I am currently a third-year Bachelor of Computing student specializing in business analytics at the National University of Singapore. My interest in finance started when I was 16 during my polytechnic years, where I specialized in banking and finance. It was from there which I realized I enjoyed numbers, people, and the complexity of challenges that data science or finance could provide.
Great. So, and can you tell us a bit more about your investment philosophy?
Sure. As written on my Alphaswap profile, my investment style could be summarized as spotting tiny patterns alongside bigger picture market movements. As I was rather new to trading and I began during the height of COVID, my philosophy was to target underpriced equities in regions that were poised for the best recovery, such as healthcare, remote technology, e-commerce. I mainly use the programming language R to analyze equities with the highest volatility and use correlation as a measure against the SP 500 or another equity in the same industry or sector.
Great. So which stock are we going to talk about today? What's the trade?
Okay, the stock that we're going to talk about today would be BioNTech SE.
And can you tell us a bit more about the downside, the upsides, any context in the trade?
Sure. The upside of the trade is that BioNTech is currently set to provide 50 million needles to extract more COVID-19 vaccine doses. Evidently, this means that there's an existing and extremely high, if not urgent, demand for their products and services. Additionally, being in the biotechnology sector, what the company delivers requires a high degree of precision and medical expertise that cannot be easily replicated, especially with safety and lives at stake as the highest priority.
Okay, so that's great. It's obviously a company in the healthcare space. Can you tell us a bit more about what the company is doing?
It is a German biotechnology company based in Mainz that develops and manufactures active immunotherapies for patient-specific approaches to treatment of diseases. More currently, the company is scheduled alongside the Pfizer BioNTech partnership to pledge 75 million more vaccine doses to help ease the EU's blocks shortage. Additionally, Japan has a deal with Pfizer, partner with BioNTech, to obtain 144 million doses, or enough for 72 million people by the end of this year.
Gotcha. And can you give us a sense of the key metrics that you look for at this company? Growth, margins, return on capital, what are they?
So some of the key metrics that I look for in this company are the sales. BioNTech revenue is estimated to be about 7 billion in 2021 as the first year to launch their first commercial product. The net margins for BioNTech this year are estimated to stand in the 50% range. The duration, it is also important to take note that the jump due to the COVID-19 vaccine is a temporary mitigation with highest urgency in 2021. This means that post-2021, we would need to reevaluate BioNTech again. The company should look into redeveloping products and services to suit a post-vaccine community to stay pertinent with viable solutions for the longer term. I agree that there will be multiple winners amongst these COVID vaccine stocks, Pfizer, Moderna, Johnson & Johnson, and Novavax to name. However, I've narrowed it down to BioNTech because they have a more diversified business model and the optionality to apply the COVID vaccine R&D into other therapies in development as well as other methods.
Okay, it makes sense. And can you tell us a bit more about valuation then? What's the right metric and what's your target price?
Okay, sure. So what makes BioNTech more attractive compared to its counterparts is that despite the huge gains last year, BioNTech's market cap remains below 30 billion. This reflects a share price of only around 3 times expected sales, which is a really low level for a biotech stock. The PE ratios in 2020 is negative 62.32, while the PE ratios in 2021 is forecasted to be 7.87. BioNTech's market cap is 26.11 billion currently, and it has a lower valuation multiple compared to a similar biotech stock such as Moderna. Different types of investors and traders would have different metrics, but for me, I use a combination of correlation, volatility, and factors that are driving the markets currently. My underlying target price is USD 150.
Makes sense. And why do you think the market is mispricing this stock? What are the catalysts for this to work out?
So the market is mispricing the stock because the vaccine has not been administered in full force yet as of writing this article. According to Ronnie Gell from Bernstein, it is estimated that this vaccine will make more than 14 billion this year, which means BioNTech could be looking at around 7 billion. The catalyst for this investment to work out is the successful rollout of the vaccination. The reason for the market not to price this in yet is that the growth will be seen in incremental bursts throughout the year, with each piece of positive or negative news developed. There is a shift in dynamic towards market sentiment, and we cannot ignore the psychological aspect of the new market players as well. It is becoming predominantly information and time sensitive, as seen by GME and Hertz in this and previous years. What this means for BioNTech is that a lot of drivers for its growth will lean towards any kind of positive sentiment in the form of news articles, tweets, social media, success stories.
Makes sense. And what do you think are the risks and any mitigants to these risks?
According to the CDC, there's not enough concrete evidence to conclude on the duration of the immunity. If the vaccination is effective, people would naturally endorse it the year after, making a one-time health obligation as per X number of years. This means that commercial sales would be highly dependent on the body constituency of the recipient, which is still an unknown. The main risk involved are the unlikely events that the vaccination is deemed to be completely ineffective or have strong side effects. The mitigant for this risk is that the company would be the most experienced and have the correct expertise in solving this problem, because they would be using the same lab technologies that were employed and involved in the vaccine creation. As the provider for the 50 million needles and more, they have supply agreements signed with the US government, and I believe this risk is well mitigated.
Thanks very much. It makes a lot of sense. So Leanne, finally, would like to get a couple of general investment insights for you, basically three. One is, which resources do you use for your research? And secondly, what's your favorite investment book? And thirdly, what's the most important investment lesson that you've learned to share with our listeners?
Sure. So which resources do I use for research? I usually use Motley Fool, Forbes, Bloomberg, and Yahoo Finance for my data source. What my favorite investment book is, to be honest, I have not read any investment books apart from that of academic syllabus, but I do resonate with this one quote from the investment book called Fooled by Randomness by Nassim Nicholas Taleb. The quote goes, "No matter how sophisticated our choices, how good we are at dominating the odds, randomness will have the last word." This was particularly relevant during the period where there was a simple confusion of tinker names, ZM and Zoom, ZOM, which led to the spike in the wrong company. This incident had nothing to do with fundamentals and was simply due to human error. Therefore, I think this book would be an interesting read because it investigates opacity, luck, uncertainty, probability, human error, risk, and decision making, which is very important in investing and trading. Also, the last question, the most important lesson that I've learned, the most important investment lesson I learned is to always have appropriate risk management, no matter how confident you are with any trade.
Great. Leanne, thanks very much for being with us today, sharing your insights. Very interesting, and love to have you continue being an active user of the platform.
Thank you so much, King. Thank you.
Thank you for listening to the Alphaswap podcast. If you'd like to read more about this trade idea, please log on to alphaswap.io. On the platform, you'll also find lots of other interesting trade ideas. Look forward to the next episode.